Hello traders, welcome to today's video. So I did a session yesterday. So today's date is the 6th of August. I did a live session yesterday on YouTube, and towards the end of the session I did a lesson, and I think if someone watches that session, is 2 hours long, and they'll probably not sit through the 2 hours. So I decided to record just that portion of the teaching again, and just make it a separate video for you guys to digest that lesson. And the lesson was just to cover how I anticipate stop runs, right? You can trade stop runs the way you want to. This is how I kind of see it, right? And I've been backtesting it for some time, and it actually works. So that's how I trade my stop runs. There is more to it. The advanced version, I will not teach that, but the easy version is what I am going to cover here. So what I am looking for is just the market to show me willingness to reject from a low. Now, that low, what I tend to look for is 2 wicks, one going below the other in terms of looking for a buy. So in this pattern here, I want to see this one as a wick, and I want to see this one as a wick. So we have this candle forming a wick, and then we have another candle forming another wick. So for example, I want to see something like this, a wick over here, and then a wick over there, right? Which indicates that there has been a raid on this low, or price rejected this low already. So then the immediate low, which is this one here, is the one I'm interested in. So I extend that low out in time, and I want to see how price react at that low. Now, you are going to be concerning yourself with the closing of the candles, okay? So the closing of the candles is what you're interested in. So this candle went back up and closed here. So that leaves the first wick. The second wick comes back up and closes here, right? So the third one that I am anticipating to be a stop run or stop trade, I want to see the same thing. I want the candle to go below it and then reject and come and close back above it. So it doesn't have to close all the way up here. It can close here, as long as it does not close below this second wick. That's fine. I consider that to be a stop trade. Okay, so you want the first wick, the second wick, and then you extend that second wick in time. You want to see price trade below the second one and reject and close back above the second low, which is this wick here. So a close above it, anywhere from this line and up is okay. All right. So I'm going to point out a few examples. This is the daily time frame, so you might not see a lot of them. I will drop down to the H4, and then I'll show you more examples. But on the daily, this is one that happened this week, and it did happen on most of the yen pairs which I traded, and I'll show you. Actually, let's move to the ones that I actually traded, so you can see. Let's go to, it was the pound yen. Okay. So on the pound yen, we do have this one as the first wick, this one as the second wick. We also had this one here and that one there. Okay, so there was a lot of confluences in here that suggested that price might potentially go below it and then reject, right? So if I extend the lowest one in time, which is the actual level that I anticipated them going last week, I shared that with my Telegram. If you want to find out more, watch some of my live sessions and you see the Telegram that I share these draw on liquidity on. So price went and attacked this low. So this is your first wick here. That's your second wick there. Okay, so we rejected that. So on Tuesday, right, when price opened here, went down and rejected and came back and closed up, that was a signal that price was going to reverse, right? Again, last 2 weeks, I had another one up here, which again, I anticipated. I actually took a trade on that as well. So we have the first week being here, the second week being there, right? Price goes above it, right there, and then rejects and close back down, right? So that's what you're looking for. Let's go on to the lower time frames. Let me see if I can find another example on the daily time frame and then show you. Okay. Right, we do have one here. We have this first week, second week. Actually, this one did not, this candle did close. Let me zoom in so I can see it properly. So let's investigate if this candle did close below that. Okay, it didn't. So both of them didn't close. So that can also be considered. So this one and then that one, making this, right, a raid. So we are interested in this candle's low. We're interested in that candle's low, and price came right below it. It went deeper. That's okay. But you're not interested in price action below it. You're interested in that candle, how that candle is going to close. Because when it closes, then it gives you the signal based on this pattern here. It gives you the signal that price is trying to do what? Price is trying to reverse. Okay. Let's see. I think we had another one here, but this time it didn't play out, and that's okay. Okay, because you're not gonna get everything perfect, but this would have been a trade that I will hunt for potential reversal, depending on how price is gonna trade in the lower time frames. Now, I've not gone to the lower time frames yet to show you how you can trade it. For now, I'm just trying to show you the examples, okay? And then I'll go to the lower time frame. So let's keep going. There was one, see if we can find more. There's one here. All right, we have this wick here and then that wick. So that is a raid. So we're interested in this candle right here. All right. We also have this. We actually went below it, so I would not be interested in that. It's a very specific rule, so you cannot deviate. It's either it's there or it's not there. We do actually have one here. So we have this wick and then that wick there. right? So we are interested in that one there. And then based on this one and this one, we also had one here. Okay. Let's keep going. By now, I think you get what I'm trying to show you. We do have, no, we don't. Okay, we do have one here. So we have this high and that high. Okay, so if you extend out that high, you want to see how price is going to trade above it here. Okay. Let's keep going. We also have one up there, this high and that high. We're interested in price action above that. Let's go and see what happened. Okay. And yeah, you just follow what I've just done and find examples. Now this is on the daily time frame, right? So you're not gonna get that many. We do have one here. So this is going to be a recent one that can be left on your chart. Same thing applies to this one. You can leave that one on your chart and see future price action. What's going to happen. On the downside, we have this one on your chart. So sometimes you can actually map out these levels, the recent ones, because those will be the closest to price action. So for now, these are going to be the closest to price action that you can trade, right? We have this high and that high. We have this low and that low. Okay. So let's jump into the 4-hour time frame and then see if we can find examples on the 4-hour time frame. So the one that I mentioned I traded is here, right? On the 4-hour as well. So that's the high, that's the high, and I sold up there. You will find a lot of them on the lower time frames. So on the lower time frame, you need to be very aggressive when it comes to trading them, okay, because they are going to be quick. They are not going to be like the daily time frame, which takes a lot of time. Okay, so we do have one here this week and that week. We're interested in that candle's low, extend that one in time. Some nice trades going on in there. We also have this one and that one, so we can extend this low out in time. Nice reaction up from there. Let's keep going. Okay, we also have one here. We have this high and that high. We're interested in this high. Nice reaction up from there as well. And down here we do have some lower time frame playing. This low and that low. We're interested in this low here. Okay. Some nice reaction up from there as well. Okay, this is equal low. We're not interested. Okay, we do have a short one in here, right? So we're interested in that high. And let's see the reaction. I think on the daily, we do have this one and that one as the current one on the daily time frame. Let's keep going. So we have one on the H4 here. So we're gonna highlight this low as well. Okay. Now, I've done this for the past, I don't know, 3 minutes, right? So you get the understanding. Now let's look at how you can, once you spot it, what you can do with it. Okay, so let's jump into the lower time frames. Let's use the one that I traded here last week. Now, this was a Wednesday. There was a rate announcement on the dollar index that day, which was the 27th. So that particular week, I was actually looking for lower prices. Therefore, price going above that was a hint that price was going to drop. But we also had the pattern that I've just given to you right now. So let's zoom in and show you how you can trade it. Once price takes out this high, okay, you wanna look at this candle. Okay, that particular candle right there. If it closes back down on this same time frame, like I mentioned, you want that candle to reject. So we need it to close back below this high. Okay, we need it to close back below that high. As soon as it closes below that high here, immediately drop down to the lower time frame. Now, depending on the time frame that you see it, you can backtest it and then choose which time frame you prefer. So you're going to drop down to the lower time frame. I'm going to go to the 4-hour time frame. Let me take this off here so I can get data quick. There are several ways to do it. This candle closes at 10 o'clock. Okay, this candle is a 6 o'clock H4 candle, so it closes at 10. So the last candle on my 15 minutes time frame is going to be 9:45. Okay, so I'm going to highlight the 9:45 candle. That one. Okay, as soon as this candle closes, we have 10 o'clock. So we will begin the next 4-hour candle. Right? So this is where the candle will close. This is when you know that this was a stop run. Okay, it was a stop rate. So once it closes, I want you to look at here, because this is the H4 candle, this candle here. Inside that, you wanna highlight the gap that you see. So you're gonna see whatever gap that you see, highlight those gaps. And then highlight the last down candle. So it's going to be this one here. Okay. Now there's two ways you can trade it. You can go the aggressive way or you can go the conservative way, right? The aggressive way will be as soon as price closes below the gap, okay, this gap here. As soon as price closes below that gap, immediately you can go short. You can sell on this candle and leave your stop loss above the high. Why? Because based on this high and that high, we've taken liquidity above this side over there, and then we've come back here and taken that liquidity as well. So we don't expect price to go up again for the time being. Okay, we don't expect price to go up again. Therefore, it's safe after, okay, that's after price closes in this gap here. That's why it's important to highlight the last candle. So this being the last H4 candle that went above the high and rejected, it's going to close right here. So that's when you will know that it's actually a raid on that high after the close. So after the close, that's when you drop down time frame. In this case, I'm using the 15 minutes. and identify the gaps. So this is the last one. This is the last but one. Aggressive entry is going to be here. Once price closes below this, right there, you sell. Leave your stop loss there. It's obvious on this chart, right? You go lows down here, you target that. The other way is to wait for the last, which is the conservative way, is to wait for the last down candle to give up. So this the last down candle, or swing low for that to be broken. And then once it breaks, you can start looking to sell any imbalance that you see on the upside. So let me give ourselves some candles. So this is when that low is broken. So from here, we have this imbalance. If I click the next candle, we have that imbalance, right? So you can sell any of this and then leave your stop loss above a short-term high. So if you sell this one or that one, leave your stop loss above here. Okay. The idea is because price has raided a double high, because price has raided a double high, we don't want to see price come back up here again, right? So if we do get a sell, stop loss goes there, and then we look for price to trade lower. All right. If you do take a gap, we don't want price to even go above that gap. Hence, we place our stop loss above the short-term high. And then we look for continuation to the downside. Now, if you do understand price, right, then you would know where price is trying to reach for. Because by looking at price this way, it's indicating that price wants to go lower. And if you do your high time frame analysis, it can give you levels to actually target. So this trade, the target was all the way back down here. Let me go to the 1 hour time frame to get more feed. So this trade, the target was all the way down here. Right? So I shorted. The next morning, I did see this one. I shorted above it because I understand what I'm looking for. Okay. But you don't. So for now, I'm showing you where you can enter. I did my analysis and I knew that price was going to go down. So I shorted above the high and gave myself 30 pips stop loss. Now, you are not familiar with it. If you're watching this, you're definitely not familiar with it. So I'm showing you how you can enter. Okay. But if you do a lot of practice with this and you anticipate, or if you can anticipate that price is going to reverse, and I'll show you another example on the dollar yen as well. Okay. If you are anticipating it, you can sell above the high with confidence. Okay. I'll show you another trade that I took with similar, but that one I closed it because the level of what I was expecting price to go, they went beyond it. They exceeded that level, so I closed it. But you, for now, have to wait for the break in the gap or the break of the short-term low, and then you enter. Right. So I went in here, and then the next morning in London session, at 7, there was another retracement into a gap right there. That's London. It retraced back to the low and went short again. And then here, New York session, retrace back into that gap again. Let me zoom in so you can see this low, that, and then I shorted again. And then I closed everything right here. And then we still had that move to unfold. Now, I'm not going to go into the details of the trade that I took. Selling up there is what you're looking for, or here, right? So 1, 2, 3. Okay, let's go to the actually the one that happened this week. Let's go down so you can see that one as well. Okay, right here. So let me actually go in and start on the H4. This is the low on the daily. This low here and that low. So on the daily, what are you looking for? You're looking for the daily to close back above. Okay. So let's chop this one off. That's the daily. Low, low, price reject. So once this candle closes, okay, you have to wait. The next day is when you're interested in price action because this is on the daily. Drop down to the H4. Now, with the daily, by the time the daily closed, right, you can see we've already closed this gap in. Okay, that's the last gap prior to us going below this low. And this is going to be the last up candle. Or you can use this one. I'm using this one because it has a wick or a swing high. So the aggressive entry can be entering long here. Okay, because that's the last gap. We've closed it in. So you can enter long here. Or you wait for price to break above this high and then you use that as a breaker and then you enter long there. Okay, so let me play it so you can see. So entering long here or entering long there. Now you can choose the time of the day you want to trade, which I'm not going to go into details. So here you probably might not want to take it because it's Asian session. But right here, that's London. We've closed above it. So that gives you the opportunity to go long, leaving your stop loss below that. And up we go. Okay, on the 4 hour. Now this is the 4 hour time frame. You can go to 1 hour time frame and then trade whatever you want to trade, right? So you can trade this gap in London right here. That's the London session 7, 8, buy, high, target that. Okay, let's play it. High, taken, done. Okay, so that's how you want to trade it. So you want price to, first of all, close first, drop down to the lower time frame, whichever lower time frame you prefer. Identify the last gap prior to price going below the low, and it's here. Get closed in or the high. So this is aggressive, this conservative, and then you buy this one or that one. Notice where price came back to the gap after taking out that. That's another entry. I did not take this one. I'll show you the one that I took on the pound dollar yen. Right, and let's went back up again. We've learned something new. Okay, let's go to dollar yen. So dollar yen, let's go to the daily. Now, like I said, I'm a bit advanced. I have been doing this for a while, so I understand what I'm looking for. I've given you the simple one, okay? This one is a little bit advanced, so you might not understand it. It doesn't have the low and the lower low, but it does. Okay, to me it does, and you will understand why. So don't worry about it. But going forward, we do have this one, so you can highlight that one as your latest rate level. Okay, and let's go here and show you how I traded this. Drop down to the 1 hour time frame. So me being me and knowing what I'm looking for, I started looking for the buy from this gap. Right here. So if you look, let me zoom in so you can see it properly. Right there. That candle closed right above it. I remember I was having a live session and I told them that you can buy here if you want to, right? Or wait for the candle to close, because by the time the candle closes, then you can look for the buy, right? So this was my entry. So I took a long here with a stop below that low. And guess where my target was? This equal high. Actually, it was this. Okay, don't worry about my target for now. Okay. And let's go back to the daily. This is where the daily closed, right? So let's say, for example, if you were using the H4, let me go back to the daily and take these candles off so you can understand. The H4, this is where the candle closed. So even on the H4, we have closed in the gap, right? I just, like I said, I understand what I'm looking for. So I went in there. But on the H4, this is where it closed. So after the H4 closed, you can wait for this high to be taken because that's a swing high before you start looking for your longs or the conservative way. The aggressive way is down here. If you're using the 1 hour, then this would have been your another aggressive way to enter. Okay. But if you're using the conservative way, then the daily has to close. So the daily closed here. So once the daily closed, we've already taken out this high, but on the H4, this is the high you want price to take, and then you start looking for your entries. Okay, so let's play it. Go to the H4. Boom. Price has gone above it. So now you can start looking for your entries, right? You want to enter in London, no problem. Let's go to the 1 hour time frame. This is how it looks like. It's 1 a.m. When I wait till London. It trades down, Asian session, 5 a.m., 6 a.m., 7 a.m., London session. What can you use to take a trade? You have a gap here, closed in, right? Enter long right there. And then still in for that. Now, it looks too easy for me to do this because it's hindsight, but I took all these trades. And I'll show you another entry that I got on Friday ahead of the rate, the NFP that happened on Friday. Price is yet to take out this high as the target, right? Watch. This low, okay, this is the advanced version. This low, we go to the H4 so you can see it. This low, I consider that the same way as I considered this one. right? To learn more about that, you need to join my live sessions and then ask questions. But this law, I consider it similar to that. But this time, I don't want it to be rated. Okay. I don't want it to be rated because price is bullish. So what I did on the 1 hour time frame, this low to that high is going to be a pullback. So I went long again with optimal trade entry, looking for that same gap with my stop below there, and then targeting that level. And that's prior to the rate announcement on Friday, yesterday. Price traded down there. This is Thursday. Let's go to Friday. This is Friday. Okay, price rejected, and then hovered around, extend the gap. And then the rate announcement came out. I'm sorry, the FOMC came out. Watch the time, 12. Boom. And then everything was done for the week. Okay. So hopefully I have shared something that is of value to you. If you like it, give me a thumbs up. If you want to comment, ask questions below the comment. And then if you want to learn more, obviously my Telegram is always available. Just send me a message and then we will see what we can do for ourselves. So enjoy this video, and I'll make another one to explain certain things that I do use. So until then, have a very great day.